What's going on, everybody? It is January 30th, 2025, daily log episode over NQ. In the live stream review, it's going to be a trade review as well over the trade that was taken on the live stream today. If you want to go back and watch the breakdown in real time, you can do so. Go to today's recording. Based off of yesterday and what we've been looking at this week, even since Wednesday, really, we've been drawing up towards this liquidity void as the overall drawn liquidity. I was stating that basically the entire day throughout the session of today, that we are looking towards the liquidity void as the drawn liquidity. And that's the most important framework of today, and what I'm going to talk about of the trade that I took is understanding where price is trying to draw towards. Again, if you're not understanding where price should be drawing towards, the magnet on price, then having a model and other confluences are going to be useless, and they're going to misdirect you, they're going to misguide you, and that's why having that drawn liquidity is very important. And once you find that, plugging and playing a model with confluences and time will give you that high probability model that you're looking for to work. And you may reach into that liquidity, drawn liquidity, you may not. Today I failed to reach into that. It was still profitable. It's not the point, but at times you're going to fail to reach into that drawn liquidity. And this is why we take partials, and do the right thing. So I also want to annotate in here on the daily time frame. I want to take a brief look at the daily time frame. Since this has been very, I would say, difficult to work with the last week or so, inside of this daily time frame, since that liquidity void is there, it's a very easy place to look for price to drop into. But I also want to make note of this volume imbalance. So much like a liquidity void is a little bit different than a volume imbalance, because a volume imbalance has wicks in it, versus a liquidity void is completely open. It's a gap, right? That's why it's called a void. Excuse me. But a volume imbalance, especially something like this where you've seen, let's just do this for demonstration purposes since it's not completely there, but anytime you have a volume imbalance, if price runs this way through it, right, that means there's sell side delivery that's been delivered inside of that volume imbalance. And even if this liquidity void wasn't here and this was one singular candle, there only would have been sell side delivery inside of it. So you also want to see buy side delivery be delivered within it, what we're doing currently, delivering buy side within it. So you want to see a passive sell side and a passive buy side, and then it's balanced. It still can be extended, but it's still balanced at that point. You're going to see that a lot with new week opening gaps, because they usually open up as liquidity voids turn into volume imbalances, and then you can watch and see it. So that's just a side note. Let's get into today. Again, that was the framework of today, was looking at the liquidity void. So as long as you're paying attention to that, everything else will become easier. And it looks like we're about to get up into that liquidity void while I'm doing this recording, so it's kind of interesting. It's almost the same thing as yesterday, where I was looking for that possibly to be traded to during FOMC, and the after portions of the afternoon, and the next day open and traded higher, and same thing here, open, traded higher, and we're basically getting to it. So you could bitch and complain about it and be upset. There's nothing we can do about it. It is what it is. Still can maintain profitability even without getting to that or being a part of it. But going into today, let's dive down into a 15-minute time frame. We'll kind of replay it. This is what price was looking like before the open. So when I'm going into an open, I'm looking at beforehand, well, I'm looking at the drawn liquidity, which the drawn liquidity is the liquidity void, right? So if I'm understanding that price should be going up here, then I should be looking at a potential model to get up into there. But first off, I'm also looking at what we're doing pre-open. And what we're doing before the open is we're dropping down inside of this inefficiency here on a 15-minute time frame, and we're dropping down inside of that with a previous new week opening gap, which is here, and we're displacing away from it pre-open. right? And what are we also doing? We're taking out sell side liquidity, which is here. So in my mind, when I'm going into an open, if I'm biased higher, I'm not anticipating today, I was not anticipating a run back beneath this low in here because we've already ran the sell stops here. So you have to ask yourself, well, why would price want to run back beneath this low in here if we've already done the work underneath this low, right? And price is displacing higher, and we're utilizing bullish PD arrays. So on a 15-minute time frame, this sell side imbalance, and this was all annotated during the live stream, that turns into an inversion for value gap. So what are we reading? Well, we're reading how price has taken sell side liquidity, price is displaced higher, showing bullish prices, it's utilizing bullish inefficiencies, and we're displacing off of that. So this is where on the live stream, I'm going down to a 5-minute time frame. I'm also utilizing that. And I'm looking at the 5-minute time frame dealing range, and I'm looking at this inversion, which is in the 5-minute dealing range, which was here, right? Inside of that inversion, there's also a buy side imbalance here. And where is that at? Within the 5-minute dealing range. That is within a discount. So what I'm looking at from this dealing range low, and I'll take this away, from this dealing range low to high, coming into the open, we're dropping down, right? So I'll play by play here with the candles in replay mode. What I'm looking at, and I'm understanding going into the open and going into the session as well, I'm looking for higher prices. I understand that price has already done the work underneath the sell side. We're displacing higher pre to the open. And the only other thing that I was looking for, which I didn't know was going to happen, but this is all based off reaction and the time that you spend on the charts, is there is relative equal lows resting within this dealing range. So this is internal sell side liquidity. This would be external here. So internal sell side here, if price dropped down into that, which it did, if price dropped down into that and never closed outside of this buy side imbalance or the inversion, and then you see a displacement out of it, that's completely fine, right? That's completely fine because all it's doing is it's dropping down to take out sell side liquidity before it rallies higher. I'm not expecting or anticipating this low to be ran. Why? Because we've already ran this low here, and price is already primed and near in proximity to that liquidity void, which is above us, and also close to this minor buy side liquidity pool, that minor buy side liquidity pool. So I don't need a run beneath that. And if you look at the 1-minute time frame, this is what we see. So you're going to watch the lows in here and just keep your eye on the big orange box and the blue one. All of this before the open as well is kind of aimless in here. This is why we wait for the open. This is why we wait for time to engage with the market, because that's going to give us the cleanest delivery and things that you can trust. Most importantly, trusting price. So what we're seeing in here on the 1-minute time frame is price dropping down, taking sell side liquidity, and you have this sell side imbalance here, which my old self would have seen this displacement off of the open and said, well, there's an inefficiency here. You also have an inversion that we can classify that as a sell model. No, because that's not correct. That's not within the correct framework. So all I'm looking at, you can go back to the live stream, is I'm looking at it saying that's a drop underneath sell side internally. And I'm also watching as a confluence, I'm watching ES, which was printing a lower low here. And what is that? That's a bullish SMT. Already confirming my bullish sentiment and drawn liquidity for the day. So what else am I waiting for? Well, if it gets up above this sell side imbalance, that's showing me what as well. So right there, and I annotate that right in the live stream, right there at that moment of time, that's showing me a change in state and delivery. It's no longer respecting bearish order flow, and it should be treating it as an inversion. It should flip it. So right inside of that inversion, you also have this buy side imbalance here. And what is this? This is the 2022 model in a sense. Basically, you have a run on sell side liquidity, displacement higher, leaves an inefficiency. You target near buy side liquidity pool. So you have your inversion, you have a buy side imbalance. You also have this down close candle, which is your last barrier in price, which is your bullish order block. So you have 3 barriers, 3 PD arrays in the way in order for price to go higher. So I put my position in here. My stop was beneath this low, and price rallied perfectly. So you could see from this dealing range low to high here. It drops it down into a discount, and then we see that expansion higher. It tags this minor buy-side liquidity pool, which are relative equal highs, and then we make our way towards this buy-side liquidity pool, which is here. And that's external buy-side liquidity pool because that is your highest high within this dealing range. So from that high to this low, that is the external buy-side liquidity pool. Overall, I was looking for the liquidity void to be reached into, and we just didn't. Did I anticipate that or see that incoming? No. Does that mean that I can't be profitable? Of course not. You saw me do it today. So being right or wrong doesn't get you paid. Executing on the model and within the correct framework will get you paid. So the reasoning why we had this drop lower, if you want to get super technical, is because from this dealing range low down here all the way up to that high that we printed, we never got into a discount, right? We never got into a true discount. So once we printed this new high up here, what did price do? And this is why I was very hesitant to call for these lows down here during the live stream, even because my drawn liquidity is very biased on that liquidity void up here. That's the parent order flow. That's what I'm leaning towards and heavily biased on. So it's hard for me, just because there's relative equal lows, to call that. I could understand in the moment of time during live stream, this could just be a retracement to go higher. And guess what we did? It was just a retracement to go higher the rest of the day. So price drops down into, if you extend this to your right, this is a reclaimed bullish inefficiency here inside of a discount. You could also look at this wick as well and split that in half. So we'll do this for the view, 50%, extend that out. It's within a discount. And then price expands higher the rest of the day. So overall, you have to keep the parent order flow in the forefront of your mind, understanding that the narrative is very important, and leaning on that, trusting it. And there's times to let it go and times not to, because I could definitely see on this side as well, when price is moving lower, a lot of people could be looking at this trying to short it and getting burnt on that. Price rallies higher. Luckily, price retraced, back down into this inefficiency and the previous new week opening gap. So you have this inefficiency here, right there. You have a inversion fair value gap, which is right there, and price retraced down into that to utilize this leg up higher. So from now this dealing range low to high, price drops down, that's 50% into a discount, and then you see this rally higher. And that's your homework, is to annotate this PM session leg and how we rallied towards this buy side liquidity pool, which is here. That's your minor buy side liquidity pool, rallying into this inefficiency, which is here, extending that to your right. And there was even some shorts in here as well that you could have utilized. But as far as looking for a high probability trade on side with narrative, I think the shorts would have been harder for me to pick off. It's the reason why I was not willing to do it, because I was biased. Even after that drop, I was still biased on higher prices. So eventually, looks like we probably, if I get out of this, looks like we just delivered to the tick. Boom, liquidity void reached into. So if you don't believe me, you can go back through all the daily logs and live streams. I've been calling that for a couple days now, or a few days. So yeah, hopefully that was a good recap of today. Hopefully you guys enjoyed. Stick with the live streams, man. If you really want to learn, be on the live streams, take notes. Even if you're not able to be present, go back through them to see the thought process and how I'm digesting the information, because there's some things that I also miss over in the recaps that I'm probably talking about in the live streams, just because there's a lot going on in the moment of time as well. So hope you guys enjoyed today, and until tomorrow, good luck and good trading, everybody. Be safe.